Hey guys, come on in. Hey guys, we're back talking about those 6 tenets of what it takes to get a mortgage, get a house, and more importantly, stay in the house and be, have a good quality of life. So the third thing, oh boy, did we get this question all the time. And we can speak personally to it because we've had issues with it in the past and gotten to ourselves, just learn through experience, the highs and lows, what to do, what not to do. And I think you guys will get a lot out of this topic, and that is credit. Let's just start with a tenet of what credit score at a minimum do I need to get a qualified mortgage. 580 or higher. Anything lower than that, there may be hard money or these other lenders that are going to require a lot more money down, but in general, rule of thumb, FHA limits are 580 or higher, and we'll get into more ranges and stuff like that. But in general, they're going to look at the middle score of the 3 credit bureaus. So TransUnion, Equifax, and Experian, Credit Karmas, Credit Sesame, things like that. We're going to give you ideas, but it's more so to give you notifications of things that are going on in your credit. There's different algorithms that a lender has that they're going to pull for their what's called a FICO score. But in general, you'll know if you're paying your bills on time, depending on what your credit score is. So the 3 things I want to talk about is credit history, credit utilization, and of course, paying on time. So credit history, there's a lot of people out there that are scared of credit. They don't feel like they would be responsible with credit. That's you, then you're probably scared or definitely not going to qualify if you have no credit history. So using a credit card or a secured credit card, which acts like a debit card, say you put $1,000 on it and you use that $1,000 and it's recorded like a credit card, that's called a secured credit card. Or you open up a Visa or MasterCard, American Express, whatever the case may be. You put your gas on it for the week and you pay it off every month. That's credit history. That's establishing credit history. If you have a car note and you're paying it every month, that's credit history. So don't be scared of it. Utilize it, because without credit history, that can hinder you just as much as anything else. The second thing is credit utilization. So the easiest way to look at this is you want to keep a ratio under 30% for each of those lines of credit. So say you have an American Express card or a Visa or MasterCard, you have a $10,000 limit. You want to always make sure an ongoing balance is under that $2,099, $999. So, because 30% of $10,000 is $3,000. So you want to always make sure you do not hit that $3,000. Again, you should be utilizing it as a 1-month loan for you, groceries, clothes, whatever the case may be, and pay it off each month and never rack up above $3,000. Now, things happen in life, right? You have your transmission goes in your car, anything like that. If you've got a good credit score, you're probably going to get a 0% offer for 12 months, balance transfer offer, stuff like that. The trouble comes in people that have bad credit, that you've now had to put that transmission and it's $1,500 and your ratios are still fine because it's under the $3,000, but you're now only paying the minimum on it. And that starts racking up because you got that 15, 20, 25% interest rate, right? And you're still swiping to pay for your groceries and maybe on a vacation and all that kind of stuff. And if you're only paying the minimum on it, that's really starting to show the credit agency that you can't afford what you paid for that last month. Month after month, you continue to not be able to pay that off. Once it gets above 30%, over $3,000, and the higher it gets, the lower your credit score is. So keep that in mind when you're using your credit. The final thing is the biggest, thing that's going to have an effect on you. Or do you pay your bills on time? Do you make that credit card payment on time? Do you make the cable bill payment on time? Your gas bill, your electric bill, your rent payment, anything that that can be recorded to the credit bureau. And if you're a person that pays your bills on time, you're going to see your credit score either stay stable or go up if those other elements are there, that you have some set of credit history and you're using your credit responsibly. You're keeping it under that 30%. So those are the basic tenets. Now, the ranges of credit scores that they're going to be looking at, like I said, is a 580 to about a 679. You're going to typically qualify for what's called an FHA mortgage, again, dependent on the income and your debt ratios. So FHA stands for Federal Housing Administration, and that's the credit scores that they're going to be looking for, that middle score between 580 and 679. The next set is going to be 680 to about a 739. That's going to give you, you're going to be looked at as a really strong, credible borrower, and it opens it up to conventional loans. And how that helps you is a lower down payment, typically around 3%, stronger interest rate that you're going to get on it. And it's going to allow you to open up to possibly a lower PMI, private mortgage insurance payment, maybe even a no mortgage insurance payment, and get you a solid interest rate. Then once you get to 740 or higher, it's going to give you really, you're looked at as one of the top, potential borrowers for that mortgage lender company. So the rewards are, you're going to probably get the best interest rate. Doesn't matter if it's a 641, 645, 800. I think the highest you could get is 850, 825. Doesn't matter once you get over to 740 or higher. So keep those, goals in mind. So why it's important to talk to a lender from the jump is you could be at a 670. Yeah, you're qualified for the FHA mortgage, but you're 10 points away from getting a lower credit, a lower interest rate, a better loan program, a no or lower PMI program, and that private mortgage insurance when you go conventional is going to be able to be dropped off once you get 20% equity into the house. So keep that in mind with credit. So my overall message to you, and one final thing I want to talk about, is credit repair. Believe it or not, we're real estate agents. I became a homeowner in 2002. As a couple, we became homeowners in 2014. But 2012, because of layoffs, medical bills, issues, stuff like that, we did not have qualifying scores in 2012 when we wanted to be homeowners. So we went, what most people do is pay for a credit repair company. I think we paid them each $75 a month. And they send letters and send in to the credit bureaus, and they put it into what's called a dispute. That's going to raise your credit score because all of a sudden that is kind of technically off your credit report. When the lender looks at it, that dispute still needs to be resolved. So the lesson learned in that is that $7,500 you're paying that credit repair company, that's that money you could be using to pay down things. So don't rush it just to get a credit score to only find out when you go through the underwriting process and all the loan processes, I still can't qualify after all that. And I could have used that extra $100 to pay off debt or to open a secure credit card to get that score up anyways. That debt needs to be resolved no matter what. So the basic tenets, 580 or higher, watch your credit utilization under 30%. Pay your bills on time, always the most important, and establish credit history and keep that credit history open. Do not go to Zales to get that chain for your honey or whatever you want to call it, and then don't use it for 5 years and they close it on you. Make sure you're utilizing it, paying it off on time, and you'll see your credit scores go up. The biggest thing, call one of our preferred lenders, or we like to call lender referrals. Just have your credit run through what's called a credit analyzer. They're going to tell you what to do. Credit repair doesn't really work when it comes down to going for a mortgage. All right, guys, we're going to talk about the last couple topics, but hopefully you get a lot out of that credit video. We'll talk to you soon.